Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, November 26th, 2013. We had a very modestly positive day, at least kind of by the top line. Look at the numbers, but the market was actually fairly weak today. We'll get into why in just a little bit as far as the technicals go. Internally, we're negative on the advanced declines on the New York side. The Nasdaq side was just barely positive, and the VIX I think was the real tell today. It was up 53 cents at the close, but it was higher all day, even as stock prices were higher for much of the day. So, the sell-off that precipitated this afternoon was not a surprise to the guys at Tradesight and certainly all the participants and subscribers in the lab. We were not on board with the long side of the market. We were treating it as rental only and prepared for a sell-off, with the VIX being up on the day. So let's take a look at the patterns and get into what the different market-leading futures look like. Now let's briefly just run through the naked charts and take a look at what the patterns look like. Here's a look at the ES futures. The ES futures were higher on the day, but you can see we've got a dark body candle here. So we closed below the open. And since we did make a new high, we do have a contra candle printing here at range high, which is definitely not a bullish. That's not a bullish candle here today. So tomorrow we're going to be favoring the short side out of the chute. Here the Nasdaq futures, similar pattern here. Range high on the chart, made a new high on the move, closed up on the day, but we did settle below the day's opening, so we do have a contra candle here as well. I'm not going to put the chart up, but we do have the same condition on the YM side. So the ES futures, the NQ futures, and the YM futures all posting range high contra candles on the day here. Alright, so let's take a look at the major futures contracts with levels. Big development here is we're now 12 days up in the seeker count as far as the trending phase goes. So all we need is one more candle in the trending phase, and we're going to record that 13 exhaustion warning. It could come as early as tomorrow, depending if we meet our criteria. Certainly, this is a bearish candle on the day with this contra candle, but I'll have to see how this plays out. Major levels overhead are going to be the next level is going to be this 6/8 level at 1812.50. To the downside, we're going to have support at 1788, 1787, which is the 10 EMA, and then more support at about 1781 and a quarter. Moving on to the Nasdaq side. Nasdaq side's got a fairly similar design. It's 10 days up. It's a little bit less far along in the seeker trending phase, but we're getting pretty close. So we could get a signal possibly this week in the NQs. We could also get it certainly in the ES. The ES would be easier with the short week, so we're going to lose a trading day or two. So we've got to keep an eye on this 8/8 level here at 34.37.5. That's going to be key resistance. We did interact and touch it today, but that's going to be a big area of resistance. If we do bust higher, the next level is going to be the plus 1/8 at 35.15, which is quite a ways away, but not without reason and outside of the chance of trading. To the downside, we're going to have support at the 10 EMA coming about 33.97, 33.98, and then much more important support at the previous week's low at that 7/8 level. Here's a look at the Dow Gold ratio. This is one of those very interesting intermarket analysis. So what we want to take a look at is kind of the relative level of it, and take a look at where the retracements are. This is the daily time frame. You can see we had this real impulsive move to the upside here. Smacked this level here, fell back, pivoted, took it out, and we're getting very close to this next level here on the chart. So when this ratio is on the rise, that means traders are favoring equities over gold, and gold has certainly been liquidated all year long. But if we toggle up to the weekly time frame, we'll see a little bit of a better picture here. You can see that post-crisis, we saw a lot of money flowing into gold and out of equities, and we found our bottom back here in the second half of 2011. Have pivoted back up. They're coming back up to very key retracement, coming up into 38% fib on the weekly chart, and that's going to be key resistance. key resistance because you can see the consternation in the working of the level back here before it's ultimately lost to find the real bottom. But this is going to be a key area of resistance, and if we do pile up into that this month or at the end of this year, that's going to be a pretty notable level and a big development, and that's a spot where we could see some fatigue in equities and possibly some rotation back into the hard asset classes. In this case, it would be gold. So let's keep an eye on this chart. This 38% fib is going to be very notable going forward. Here's a look at the 10-day trend. The 10-day trend has been kind of bumping off of that 0.85 overbought threshold. We're right there. We haven't had a good penetration to really overload the market with overbought energy, but there is just a little bit of overbought energy in the market right now. It's always better to get that break and that close below 0.85, but certainly we could certainly get that within the next couple of days with one really nice low trend reading, and then get that high probability reversal in place. But anyway, keep in mind here that while we don't have that classic overbought reading, we are very low in the gas tank as far as having any fuel left for the market to run to the upside. Doesn't mean we can't have another day or two, but if we do run up and get a couple of low trend readings, we're going to be exhausted. All right, so here's a look at the multi-sector daily chart. Had some pretty good performance the last 2 days out of the BTK and the BKX. The SOX has been lagging and hasn't really punched out a new high, and you can see that the XAU is still kind of just bumping along the bottom here that was set in late June. All right, so here's a look at the individual sectors ranked from best to worst. The airline industry was the top gun. The Morgan Stanley Cyclical Index was the next. Broker-dealers were fairly strong. Housing was fairly strong, and as were the banks. Transportation average was fairly strong, which is a plus, but that was really kind of offset by the OSX, the oil services, being the last laggard. Had a really nice short this morning that we put on pretty early in the day on the OSX ETF, which is the oil services ETF, which is the OIH, and that closed low a day and was a real nice short. So keep an eye on the oil services. They're just starting to turn down. We'll take a look at the chart, but that definitely could be interesting. Interestingly, the gold and silver index was not the last laggard, and they may be trying to find a little bit of a bottom. We'll take a look at that index in just a little bit. Here's a look at the XAU. XAU is still kind of using that oversold area of the GAN box for support. We do have some more meaningful support, just a little bit lower at the -2/8 level. But we're 7 days down now in the seeker momentum phase, so we could easily see 8 or 9 bars print and give us a little bit of a pivot and potentially trade back up to 87.50. But for now, definitely do not get too brave in the gold stocks, the silver stocks, just in case there's a little more juice to be squeezed on the lemon with end of year selling. So be sure to keep on top of the technicals, but don't get excited until we see some kind of a reversal candle on the chart. And when we do see that, then we'll know what to do. Here's a look at the XOI, which is kind of a broad-based measure of oil and gas stocks. We hit that 8/8 level with the 8 bars up, so we did set up a downside candle here. We didn't close below the 10 EMA, but we could do that fairly easily. But for now, definitely be prepared for a little bit more of a retracement. We are definitely bumping up against key resistance here at the 8/8 level. Here's a look at the oil services index. This is the OSX. This is quite a bit more volatile and a little less smooth than the XOI. We did break below that 4/8 level, below that key support of the 4/8 level in combination with the 50, and had this big break to the downside. Probably at this point we're only 6 days down here in the momentum phase, so we definitely could target this active static trend line here before we find any kind of meaningful support. So be prepared to look for some continuation shorts in the oil services. BTK index today was just kind of okay, but it did post a contra candle, meaning that we were up on the day and especially a range high, but we closed below the open. So just be cautious in the BTK names. We could see some short setups in that group tomorrow. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.